Here we're having a look at Green Mountain Coffee going back to October the 19th when we were watching it in our Skype chat room. And you'll see here that in that just 3 days before, it had taken a significant move towards the 150-day moving average, the exponential moving average, and then taking it out, which is a pretty good indication that we're going to see continued downside. Next, we're looking at on the 26th. On the 26th, Green Mountain had further gone down as expected, and came to rest here on the 61.67, which was the negative 61.8 percent Fibonacci retracement. Going on a little further here, there was some recovery, and this image is from November the 8th. So I redrew the Fibonacci lines where we had that low, and back here I had indicated that this was not a long position that you wanted to be in and you wanted to go short. So we see here it's coming back, and as is usually the case, the 20-day SMA, which is in the fluorescent green here, will act as resistance, which coincided here with the top of the 20-day channel. Now on the following day, the earnings results came out, and this is an image that was taken in the after hours, and you can see that Green Mountain, the results were not very pleasing to investors. And at that time, I told the group, I said, here's our next target, 38.2% retracement, and I said, if you happen to be long, well, you could probably add at 33, and we'll get a bounce then, and we'll see some short covering come in, and then I'd say we're going to get a bounce back up into this range here, where we broke down at 56, and then you'll be able to close your long positions, and would be a good opportunity to go short again. So in our next image, we'll see that on the 10th of when we opened up the next day, we had this big gap. Remember, the previous image here was after hours movement, and that won't show up the following day when we have actual opening. So we had some serious volume here, and we almost came there that one day, and then here's what happened. The following day, on November the 11th, we actually came very, very close to tagging. I think the low that day was still around the $34 mark, but hey, well, that was close enough, and you see we have a hammer because the market brought her down. I think it traded here for maybe one trade on a large volume and then brought back up. So I said, okay, there we go. We're going to resume, or we're going to begin the dead cat bounce. And sure enough, what I had come to become aware of here is a head and shoulder top. Now it's not perpendicular, but it is pretty close to being symmetrical. If we look at this here being the neckline, and of course we have a shoulder here, we have the head here, another shoulder here. So we have the breakdown here. Now, if we looking at this, oops, I'll go back. There's our breakdown, and so we can expect it to come back to our neckline or thereabouts in that proximity, and then a continuation. And with this chart, we're probably looking at now, and it's probably not what anybody long wants to hear, but a potential price target within about a 6-month period of between $0 and $9. So again, when you get a chance to get up in here to get out, then you might want to do it. So moving on to November the 15th. I took this image yesterday, and we're continuing that dead cat bounce. I'd say we're going to get close to 56. You want to be watching that for some resistance. There should be some supply here. If we do take this out, then the SMA right here at 62.54 will provide more supply, and most certainly on the top of that 20-day channel. And our last image here I had taken earlier this morning, and here we are. We're crossing the median of that 20-day channel and getting close to 56. So I'd be looking at between 56 and 61 because our SMA has come down. Remember, as each day goes by, as time goes by, the moving averages do move down. I put the 20 SMA in here because I like to use the Bollinger Bands as a guide for well, numerous things, including volatility and the moving averages. Everything sort of tends to resort to the mean, and this would be no different. The mean being the 20-day SMA. So we have a gap here, which is another indication, another potential signal that this is going to go down, because if we do get up here, these gaps tend to get filled, just as this one right now is being filled. So we're going to keep a close eye on that. I would be looking at going short on Green Mountain in and around the 61, between the $56 and $61 range, and this is a long-term outlook going out to about 6 months. Again, target price between $9 and $0.